Hey everyone, now that we have the shareholding data of all the companies for March 24 period, I did an extensive exercise to identify companies where FIs and DIs are showing interest and adding them in their portfolio. The idea behind this exercise is to understand which sectors or stocks FIs and DIs are bullish on and find them attractive in terms of valuations. Moreover, it also helps in identifying new companies that we can further deep dive to understand the business model. So it's a nice exercise to identify potential opportunities in the stock market. Having said this, at the end of the day, you have to do your research to build that conviction on your investment. So please don't blindly invest in any company just because FIs and DIs are buying it. It is more of an idea generation step and then you can deep dive further. In fact, some of the stocks from the list I also hold in my portfolio. So FIs and DIs adding stake also boost my conviction. Alright, let's get started with the list. So first company where FIs and DIs have added stake is Waste Recycling Company. Company name is Ganesha Ecosphere. Incorporated in 1987, Ganesha Ecosphere is a leading PET waste recycling company in India and is engaged in manufacturing of recycled polyester staple fiber, then spun yarn and dyed textured yarn that find usage in clothing, padding insulation, then carpets, fabric, then saris, cushion, pillow, etc. In Q4 of FY24, company raised around 350 crore of money via QIP, where it invited qualified institutional players and it attracted top FIs and DIs. So if you look at the shareholding pattern, after QIP, promoter stake in the company got reduced from 42.3% to 36.4%. And FIs purchased nearly 9% stake that include Goldman Sachs, East Bridge Capital Master Fund and Societal Journal. DIs were already holding significant stake that also got increased to 21.3%. It includes SBI Mutual Fund. SBI Mutual Fund increased its stake and ICICI Prudential has made a fresh entry. Public holding in the company got reduced from 36.7% to 32.2%. If you look at company's historical data, company's revenue growth has been pretty flat in the last 4-5 years. Company's operating profit are flat and net profits have also not grown. Even the profitability ratios are not very exciting with ROE of 11.3% and ROC of 10.6%. Company also has a high debt to equity of 1. So historical data is not very exciting, but what is exciting is company's future growth plan. First of all, sustainability is one of the multi-decade theme and plastic bottle manufacturing has a lot of potential. The most promising aspect of the company is its newly launched brand Go Revise, where it manufactures RPT chips bottle grade focused towards F&B industry. In fact, company has also received order from Coca-Cola. Then second product line is RPT chip textile grade focused on apparel and textile brand. And third is RPT fiber and yarn. Basically, company has raised 350 crore via QIP and 150 crore from preferential allotment of shares, and this money would be used for capacity expansion and fuel the growth. And that is the reason management in their last con call guided for 50% growth in revenue for FY25. Now, if you look at its share price, it has grown multiple times in last 20 years, but in last 1 year, its share price has been consolidating. Currently, company commands a market cap of around 2,700 crore with a P ratio of 80. Although P is not a right metric as the earnings have reduced in trailing 12 months. EV to EBITDA is a better metric which is reasonable at levels of 24. So it is certainly a good idea to consider this company. Maybe I can do a detailed video on the same. Then second stock where both FIs and DIs have invested their money is Gokaldas Export. This is one company I have been tracking closely and covered it last year when it was at levels of below 400 and today it is touching levels of around 870. Personally, I am sitting on nearly 120% profit in the company and it's basically a manufacturer of apparels with major market in the US and a great turnaround story after the new management took over the company a few years ago. If you look at the shareholding pattern, there's a latest apparel shareholding available on screener that shows FIs increasing their stake from 21.2 to 25.2% in the company. It again includes top institutions like Goldman Sachs that has increased stake in the company, then Abu Dhabi Investment Authority, then Custody Bank of Japan has made a new entry, then Fidelity Fund has done fresh buying. DIs have also slightly increased the stake to 31.59% and again include top domestic institutional investors. Net public holding in the company is consistently reduced from 52.6% to 33.8%. In case you have not watched my last video on Gokaldas, please watch it to understand the potential in the company. I've also explained the reason why there's a low promoter holding in the company, and if you look at company's financials, there's a huge turnaround after 2018 and revenues have doubled, margins have expanded, and as a result, company's profits have grown nearly 5 times in last 5-6 years. Company is also generating significant cash from business. It also has high profitability with ROE and ROC of around 20% and debt to equity of just 0.15. Since I track the company closely, I am expecting outperformance in financials in FY25 due to sharp fall in cotton prices and inventory restocking by US retailers, and that should be reflected in the share price. Currently, company is trading at a market cap around 6,000 crore, P ratio of 46. I am quite optimistic about the company for the next few years. Then third stock where FIs and DIs have added stake is Precall. It is a leader in driver information system, which is the ADAS on the two-wheeler and four-wheeler. Again, I have discussed it in detail a few months ago where it was at levels around 330 and today it is at levels around 430. In the video, I explained in detail why it can double in the next 2-3 years. The biggest reason is management has guided for revenue of around 4,000 crore by FY26 as compared to FY23 revenue of 2,000 crore. And there is also scope for margin expansion. In fact, Precall is also part of my Diwali 2023 portfolio. If you look at the financials, company has been growing at a good rate in last 2-3 years and profits have grown significantly. Precall is also generating high cash from business and has got a good ROE of 18% and ROC of 20% with debt to equity of just 0.12. Considering the premiumization trend in the auto industry and need for better driver information system, Precall is well placed to capture the growth opportunity with all top auto clients in its portfolio. That is the reason both FIs and DIs are buying this company big time. FI's stake has increased from 2.9% to 14.4% in last 3 quarters with names like Goldman Sachs and Nomura. And DI's stake has increased from 0 to 16.6%. Wow, what a huge buying. And public holding has significantly reduced from 53% to now at 30%. Currently, company is trading at a market cap of 5,200 crore with a PE ratio of 40. Now, fourth stock is from Affordable Housing Finance. It's Aavas Financials. If you are following this channel, you would know that I am bullish on Aavas future growth prospect and it's also part of my Diwali 2023 pick. Now, if you look at Aavas shareholding, promoter holding has reduced. Again, it is a PE firm that has sold some of its stake to book profit. However, this stake sale is mostly absorbed by FIs and DIs. FI's stake is up from 32.3% to 34.8% and DI's stake is up from 15.3% to 24%. In fact, DIs are consistently adding Aavas since last 8 quarters from 9.9 to 24% that again include top institutions. Now, if you look at Aavas journey, its share price jumped significantly since its IPO, but share price corrected and fell down 60%. I have already explained the reason for correction. Now, in my last video, I mentioned that there are 2 major changes with the company. One is management transition where company has new MD and second is technology transition where Aavas upgraded its tax stake to cater to larger scale of business. And that resulted in temporary slowdown in disbursement and hence Aavas share price underperformed. However, in latest Q4 result, company has posted 39% quarter-on-quarter growth in disbursement and after that its share price also seen good upside. Moreover, if you look at overall NBFC sector, the biggest challenge today is the higher cost of borrowing due to high interest rate environment in the country. However, the rate seems to have peaked out and a few quarters down the line this interest rate would reduce. That would reduce the cost of borrowing and improve the profitability of NBFC sector. And that's where I think Aavas is well positioned for long-term growth. Currently, it commands a market cap of around 12,500 crore, P ratio of 25 and price to book of 3.3. Now, fifth stock is India's largest airline company, Interglobe Aviation, aka Indigo Airlines, that has nearly 60% market share in airline sector. I remember discussing Indigo after Q3 results and from there it has already rallied around 30%. Still, it is trading at a PE of only 21. Moreover, if you look at travel trend, it is growing big time and airlines have also increased the flights rate. So, Indigo is going to be a big beneficiary of travel boom in India. Not only that, company is also expanding its international presence and now already operating flights in many parts of the world. Now, if you look at company's financials, its revenue tanked badly during COVID, but look at the exponential rise in revenue post-COVID and net profits have also zoomed exponentially. What a brilliant turnaround from COVID lows. I expect Indigo to continue its outperformance. Although stock has doubled in last 1 year, it is still trading at an attractive PE of 21. So there is more growth potential ahead. And that is the reason both FIs and DIs are adding it in the portfolio. FIs have increased stake from 18.7 to 23.66% and DIs are actually increasing stake since last 12 quarters. Wow. From 3.9 to 15%. And it seems the public does not prefer Indigo as they have only 3.9% stake. Now, sixth stock is from one of the hottest theme currently and it's power sector. Stock name is Bharat Bijli. Established in 1946, Bharat Bijli is a leading electrical engineering company engaged in manufacturing of transformer, then electric motor, elevator system, drives and automation. It also provides turnkey solutions for extra high voltage switchyards, then high voltage and medium voltage substation and so on. FI stake in the company is up slightly, but DIs have consistently added stake in last 4 quarters from 5% to 9.2%, and public holding has reduced from 59 to 54.7%. If you look at company's financials, it's been a high growth since COVID for both revenue and profit. Although currently company has low single digit ROE and ROCE. However, the current demand for transformer and power sector looks sustainable for next few years, and that's probably the reason FIs and DIs are interested in the company. In last 1 year, company's share price has zoomed significantly, but is still a small cap company with a market cap of around 3,600 crore, and valuations are reasonable at P ratio of 33. Now, seventh stock is from electronic sector. It's Avalon Technology. While on one side, electronics players like Dixon and Keynes have generated humongous return in last 1 year, Avalon has been pretty flat. And the reason I've already explained. It's because it was predominantly a US focused company with nearly 70% business coming from export 3 years back and only 30% from India. However, Avalon is consistently increasing its business in India, which is now 47% and 53% from export. Management has mentioned that we are late entrant in the Indian market but seeing good resurgence in India. So our growth story in India is beginning now. In the long term, company intend to do 85% business from India and 15% from US. That's probably the reason institutional investors are bullish on the long-term growth thesis of the company. So here promoter holding has been consistent post-COVID, although FIs have sold stake in the company, but it is completely absorbed by DIs that have recently increased stake from 17% to 22.47% and include names like Nippon, SDFC, Mirai. In fact, SDFC has added Avalon in 3 mutual funds, Focus 30, Large and Mid and Defense Fund. Currently, Avalon commands a market cap around 3,300 crore, P ratio of 76 and price to sale of 3.6 and is much attractively priced as compared to other electronics player. So I think that it's a matter of time. Avalon Indian business should grow quickly, and once that their US dependency would reduce, it can do well. So worth keeping a close eye. Then 8th stock is the largest cash management company in India, which is transforming into a digital solution provider. It's CMS Infosystem. I recently discussed the fundamentals of CMS. It's a 7,000 crore company with a PE ratio of just 21. In shareholding, its promoter, that was a PE firm, has completely exited, and majority of the shares are purchased by FIs and DIs that include big names like Goldman Sachs, Nomura, and even DIs include institutions like SBI, ICICI, Kotak, Aditya Birla, 361. The biggest trigger for CMS is the outsourcing opportunity of more than 1 lakh ATMs in India. For more details, you can watch my detailed video on the company. Now, 9th stock is from the defense sector. It's Data Pattern. Again, I've been covering Data Pattern for a long time now, and the stock has generated great returns for the investor in last few years. Yet, FIs are consistently adding stake in the company since 7 quarters, and recently they increased their stake significantly. DIs on the other side have also increased stake in the latest quarter, and public holding has consistently reduced. Considering the government focus of indigenization of defense sector, Data Pattern is a very promising player to benefit from this trend. Company's revenue and profit have also grown exponentially in last few years. However, there's a problem with company's cash flow, which is very low due to high inventory days. Moreover, today Data Pattern commands a PE of 97, which is also on the higher side. But it looks like a multi-year growth opportunity, and historically also, company has grown at exponential rate, and hence market is giving a premium to the company. So worth tracking it closely. Now, 10th stock is a sugar company where Parag Parikh Mutual Fund, that is known for investing in value stocks, has made a fresh investment along with Quant Mutual Fund. Company name is EID Parry. Part of prestigious Murugappa Group, EID Parry is a sugar manufacturer that would benefit from ethanol story in India. DIS stake in the company has increased from 4.9% to 11.88%, and you can see the entry of Parag Parikh, and in fact Quant Small Cap Fund has increased stake, which is very interesting. Although currently ethanol production from sugar has stopped temporarily. However, I was really intrigued with top DIS names in the company, and when I studied the annual report, I understood the reason. Basically, EID Parry is shifting its business from low margin industrial sugar to high margin branded consumer sugar division along with various other nutraceutical products. And management was very bullish on its future growth prospect. On top of that, EID Parry share price has not rallied significantly in last 1 year and currently available at a PE of just 13 with a market cap of around 11,000 crore. Maybe I can do a detailed analysis on EID Parry. Now, there is recently a listed company where DIs are very bullish. It's Innova Captab. It's a pharma company. DIs have doubled their stake in the company, and it again includes top names. Although I have not studied the business of the company yet, but institutional interest suggests the company has a lot of potential. Apart from this, there are a few more names where FIs and DIs are bullish and added in their portfolio recently. One is Happy Forging, which was again listed a couple of quarters ago, and DIs are super bullish on the company. They have increased stake from 5.8% to 16.9%. Then next is Sudarshan Chemical, which is the third largest global pigment player and has around 35% market share in Indian market. FI stake in the company has increased from 4.2 to 4.5%, and look at DI stake. It has increased from 13.58 to 17.4%. Public holding has reduced. Currently, it commands a market cap of around 5,000 crore with a P ratio of 57 and EV to EBITDA of 19. Then you have Whirlpool of India, where promoters have sold around 24% stake, where around 3% is absorbed by FIs, but look at DIs buying from 12.6% to 33.68%. And it again includes top mutual fund houses. Then Whirlpool share price has been struggling for a long time. It's actually the entire consumer durable sector that is struggling due to high inflation in India that resulted in fall in sales and increase in raw material prices that impacted the margin. But it looks like institutional investors expect that Whirlpool share price has bottomed out. Let's see how things work out. The next stock is Angel One, a leading brokerage firm with plans to expand into multiple other financial domains. DIs have increased their stake from 9.5 to 13.6%, and today it is available at a PE of just 22 with a market cap of around 25,000 crore. Considering the growth trend for stock investment and potential in financial space, Angel One should continue to grow at fast rate. Apart from this, few other names where DIs and FIs have an increased stake include CIE Auto, where DIs stake is up from 16 to 18%. Then DIs are also buying Karnataka Bank, where they have consistently increased their stake, and recently it's gone up from 17.7 to 23%. Then FIs have increased stake in Lemon Tree from 22.8 to 27%. Then both FIs and DIs have added stake in Newland Lab and Samvardhana Motherson. So this is it for this video. It was a very long exercise where I went through more than 100 companies and shortlisted top names. Please let me know if I have missed any name. Also tell me in the comment which company from this list you are holding in your portfolio and which company you find most promising. If you want to know which stocks I am holding in my portfolio, you can explore my weekly video series where I share my own investment detail along with tracking more than 200 quarter results. And since we are in Q4 result season, there are a lot of new investment ideas. If you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.